Guess what, everybody? The stock market did not crash today, despite everyone being really worried yesterday for some reason. So we're going to talk about that. We're going to talk about the massive Nike and Amazon partnership. Well, it's massive because what it means for the world as a whole and the industries as a whole. So we're going to talk about that. Warren Buffett made essentially $12 billion today. So that was something that happened. And we're going to talk a little bit about stock market winners and losers. I'm only going to talk about a couple. And Illinois, where there's a really big problem in Illinois, how they're going bankrupt. And it's just a really important topic that I really needed to talk about. I've known about it for months now, but it's at the point now where they're at a breaking point today, and it's happening. So anyways, let's get going here. So let's start off with just the stock market as a whole. I mean, 2 days ago, everything was great. Everyone made 1 to 2% on their money. And then yesterday, everyone lost 1 to 2% on their money. And if you were to go onto the day trading subreddit, everyone was taking losses yesterday. They were cutting their losses. The stock market's going to crash. Everything is so terrible, guys. Everything's so terrible. And what do you know today? We had a normal day. I mean, look at the major indexes here. Major indexes, Dow Jones was up 0.3% today. S&P closed out at up 0.15% today. Let's see, what was the, I don't think I have the, let's see, where's the NASDAQ on here? NASDAQ's down 0.6% today. So again, it was just essentially an average day. Everything was up slightly for the most part. Some sectors were down. We're going to get to that later. But all in all, a good day for everybody. And so this video is going to be a little bit more laid back than my normal stock market news videos because for whatever reason, I've noticed that just people, one, don't watch YouTube videos on Fridays for whatever reason. I don't know if you guys know that. But two, people also just for whatever reason don't care about the stock market on Fridays either. I guess that's because the weekend, they're just whatever. They've already made all their trades by Thursday sometimes. So that's okay. So anyways, as a whole, market was good today. I mean, let's check in on the sectors actually here. So just the sectors as a whole. Let's go here. Utilities was down 0.12%. Telecom was up 0.3%. Technology was down 0.11%. Real estate was essentially zero. Materials up 0.46%. Industrials up 0.6%. Everything else there was not too noticeable except for consumer discretionaries. They were up 0.56%. Now here's the kicker that I want to mention quickly. Oil up 0.26% today. So oil's had a good day. I'm happy about that. I didn't take any oil stocks this week, but we're starting to see a little bit of an oil rebound here over the past few days. So that's something on the bright side here. Actually, let's see the 5-day trend here. 5-day trend, oil prices have gone up from about $42.50 to about $45 today. So oil's had a pretty good week. So that's the sectors. It's going to be a really quick coverage. I want to talk more about the Nike and Amazon partnership here. So they announced this today. If you're a retailer of any sort of consumer product, you're converting to Amazon. You're going to the dark side of Amazon. Yeah, you have to give in because you cannot beat Amazon right now. You cannot beat the online market, the online retail space. So Nike has been losing money essentially for a few years now. Mainly because they're mainly a bricks and mortar store, plus there's a lot of cheaper shoes out there, but Nike's all about the brand, right? Even though brands are kind of dying. I don't know if Nike's going to be able to be a fantastic top-of-the-line company like they were in the late 90s, early 2000s, but we'll see. We'll see what happens. But this partnership today, I actually have this article here from actually CNN, Money CNN, and so what they said here was that Nike is laying off 1,000 workers and they're restructuring their entire company to go away from the bricks and mortar business and more into the online retail, online selling, online shopping business, which is, what they should have started doing years ago. But they're laying off about 1,000 workers and hopefully to cut some expenses, hoping to put more effort into online sales, which is actually, I'm going to get to that in a second here, what that means for the average person actually. They've had a rough few months here. Let's see. Their Nike stock. Oh yeah, so Nike stock today, they're the big winner I want to talk about. So Nike stock today was up 11%. After they announced that they would be selling on Amazon, they're up 11%. Oh yeah, so I should mention about that too. So what this partnership essentially means is that you see Nike brands, you see Nike products on Amazon all the time, right? But what people don't realize, they aren't actually sold from Nike. They are sold from people that are buying Nike shoes and then reselling them. by themselves. Usually it's from guys like me, guys that sell on Amazon, or third parties or third-party companies. Like you'll see them from, I don't know, some like a Dick's Sporting Goods, like a giant retailer that does sell on Amazon. I don't know if they do or not. That's just an example. And so Nike's officially selling their products online through Amazon, which is pretty big. I mean, that could be, in terms of revenue, that could be tens of millions, hundreds of millions of dollars per year. Maybe $1 billion per year, potentially. Probably not $1 billion, but we're talking about a significant bump into their revenue. However, will that deter people from buying from Nike directly? Probably. So it may not actually increase their overall revenue. It's just giving them a different revenue stream, which will be quite interesting to see. I think it should increase the revenue substantially. Who knows by how much, but we will see. I think it'll be in the hundreds of millions somewhere per year. That's just my guess. Anyways, so what does this mean for a whole, I guess, as the industry? Well, I want to tackle the online sales aspect because, this is from Gary Vee. What Gary Vee has been saying is that, all these big brands like Coca-Cola, I guess Nike's just switched over, all those big brands, they're going away from TV ads because people are just skipping through them. And bricks and mortar isn't working anymore. Coca-Cola is a different company. I know Nike's different. Nike's more of like a store-based, and Coca-Cola, they mainly make their money selling them to Walmart, and then they sell through there, right? So you have to go in. It's a food business, right? So where am I going with this is that online sales are going to get more. Online advertising is going to get more expensive for the average person like me who runs ads. That space is going to be a lot more clumped because there's only so much space only so much time where people can be shown ads on Facebook, YouTube, Google, websites. And so ads are going to get more expensive. So if you're looking to get into some sort of Amazon selling, I mean, start soon. Or some sort of affiliate marketing, some sort of online business. Start as soon as possible, guys. The space is going to get a lot more crowded for advertising, and maybe Nike's going to try to put more effort into like their Facebook and their YouTube and their Instagram, and all of a sudden all your friends are going to be seeing that, and they won't be able to see the little guys like me and you out there. So what is that? I think online ads are going to go up. This is just a sign as a trend as a whole. Plus, this is an additional sign that bricks and mortar is dying. Bricks and mortar is dying, and everyone's known it. Nike's converting. They're probably going to be closing down lots of bricks and mortar stores, and they're going to go to more online routes because people don't want to go to stores people know their shoe size. People know their shoe size above the age of 16. You have the same shoe size for life. You don't have to go into the store and try on a bunch of shoes all the time. Sometimes you want to. Sure, that's nice sometimes, but a person like me, I don't really care if it's the perfect fit. I just care about me saving that hour for me not having to go out and buy the shoes or, work with some pushy, retail salespeople. That's what most people care about, right? So that's where the world's going. What do you guys think about this? This is pretty big news. Now I think Adidas has already made a partnership with Amazon, so I think Nike's just trying to catch up here, I think, in a way. And yeah, Nike's top rival Adidas also appears to have a partnership with Amazon. So yeah, anyway, so Nike's just going with the flow here. What do you guys think about this whole deal, about this Nike-Amazon partnership? Do you think that it's a good thing, bad thing? What do you think about the whole retail stuff that's going on now? Do you think that, are you going to miss the retail stores? Are you going to miss all those giant shopping plazas that are going to get turned into like urban parks or musician or art galleries or something like that? I saw an article about that today. What do you think is going to happen to all those giant like department stores and retailers? It'll be quite interesting to see what they do with it. Anyways, we're going to move on here I want to talk a little bit about Berkshire Hathaway. So Warren Buffett in 2011 gave Bank of America a $5 billion bailout in 2011 because Bank of America was going through a bunch of lawsuits having to do with the financial crisis a few years before. They needed some money. And so Berkshire and Warren Buffett, they essentially said, okay, here, take $5 billion, but there's a few conditions. One, you have to give me a 6% dividend. They're like, okay, that's fine with that. So that added up to a few $100 million. Cool. And the second option is that Warren Buffett has the option of buying Bank of America shares for $7.14 at any time within X amount of years. Fast forward 6 years later, what does Warren Buffett want to do? He wants to buy those shares for $7.14 when currently they are at $24 per share. And so just by doing this, by exercising that warrant option, those warrants of however many shares that is, he is single-handedly becoming the biggest shareholder in Bank of America. And two, that $5 billion, he's about to invest $5 billion more. That's what the share option is. And so just by doing that, his shares will automatically become worth like $12 to $17 billion, somewhere around there. So he's making roughly, $12 billion profit. We'll say that. We'll say that the shares today would be worth $17 billion. Quite amazing, right? Quite a great deal. And he's done this with like Goldman Sachs and other companies too. Just because he was actually like another bailout company in the in 2008 through 2012, he was actually his own bailout for the banks. And so I think he's actually the biggest shareholder. Is it in Goldman Sachs? It's one other of the financial institutions. And so it's quite interesting. I mean, he is one of the smartest investors. He buys when everyone else is selling and everyone else is in trouble, and he sells when everyone else is at a high. And that's what happens. Well, he doesn't even sell a lot, actually, to be honest. I don't think he sells, period. But he buys when everyone else isn't buying. And that makes him a very, very wealthy person. So congratulations to Warren Buffett. What do you guys think of this deal? Do you think it's a good thing? Are you guys more confident in the financial sector today than you were a week ago? Because remember, what we talked about earlier this week was that all of the banks, except for one, essentially, who I think passed today, all of the banks passed their financial stress tests that they have to pass these days through regulation purposes. And so are you more confident in them? They had a really good day, yesterday they had a really good day when all the other markets are down. The financials are rebounding. What do you guys think about them? Are you willing to invest in them? Good question. So anyways, that's the news. And now the last thing I want to hit on is actually Illinois. It's not a stock market topic. It's just more of a generic business topic. So Illinois, for those of you that don't know, they have been on the verge of bankruptcy for like 3 years now, a few years now. And you know what, I'll read part of this article here actually. So Illinois is on the verge of its third straight fiscal year without a budget, as Republican Governor Bruce Rauner and Democratic lawmakers struggle to agree on how to rein in the government's chronic deficits, edging it closer to becoming the first junk-rated U.S. state for credit purposes. Okay, so that is pretty massive, guys. So how is this happening? I mean, Chicago's in Illinois, right? So how's this all happening? There's a lot of people there. Why is it in such dysfunction? Well, it's simply because, they've essentially not been able to make a budget. Through their past few decades, actually, they've always had one side facing off against the other side, and no bills and laws are able to get through to fully have a plan in place. And so that's been happening for years now, and they were actually interviewing people on the street who are affected by this, and they were saying, like, look, 4 years ago we were having the same problem. 4 years ago we were having the same problem. Now it's just coming to a hedge now, coming to the very end, the final stages of it now. And so if this were to happen, it's going to get a lot more expensive to borrow money from the state, from Illinois, which is really going to suck. People aren't going to want to invest in the state itself, and Illinois as a whole could be seeing some really, really tough times because they're going to be viewed. Today's the deadline for it. Today is the deadline. If the creditors don't see a fully done budget plan in place by today that both sides can agree on, that the Democrats and Republicans can agree on, they're officially going to become the first junk-rated U.S. state for credit purposes ever. So it's quite amazing. So there's been a few things that have happened around this as well that I just want to touch on. So schools, just because the government's out of money, by the way. So government is in $15 billion in unpaid bills, and they actually have $250 billion that they owe to the public pensions. out there, but they can't pay for it right now. The government just doesn't have money. They're spending the source of the problem is because they don't have a plan. They're spending way too much and they're not bringing in enough. It's really simple as that, and they've been doing that for decades, essentially. So they have $15 billion in unpaid bills. They have $250 billion owed to the public pension plans. They've been spending way too much on public services and not bringing in enough tax money, whether it's through purposes of not having enough business activity, not having taxes high enough, so on. They just aren't bringing in enough money to counteract the public services that are going on there. And so here's a few things that are going around. Yeah, so schools are literally taking out loans because the government cannot fund them anymore. So schools are taking out private loans, which the interest on them is adding up every day in the state. There's a $70,000 interest payment that is adding up every day on this, because schools are not being funded by the government anymore. They can't. Well, some schools, not all schools. The lottery is being shut down because the state can't afford to pay the winner, whatever the number may be, $50 million. They can't afford to pay that out. So today is the last Powerball. This week is the last Powerball that they're going to have. Stupid. Well, also because there has to be some sort of regulation in place too, but that's a different story. But no more lotteries. So yeah, they spent way more money than they've needed for the past few decades. Tax cuts. Okay, so here's the other thing too, is that the Republican Party the Republican leader has had a plan in place, wants to bring in more business, give tax cuts so that businesses can come in here and hopefully grow some businesses over the long run. It may hurt the middle class temporarily, which is why the Democratic side can't agree with it, completely understandably. So what the Democratic side's been wanting to do is just raise property taxes, raise sales taxes. That's what they've been doing, and people have been moving out of the state. And so they're at this crossroads now where, as I think that, seriously, if you were just to go one side or the other, this problem could be fixed. Both sides can work. Either raising taxes, raising taxes, and you have to cut out some of the government expenditures no matter what happens, but either raising taxes or cutting taxes and trying to bring in businesses, either of which could be good in the long run. But you can't have your you can't have your toes just dipping in the water. You can't be doing that for a decade. That's so stupid. You have to come up with one plan, whatever it may be. You know, if you want to go the classic Republican conservative route, lower taxes and give tax breaks so that people will want to move here and bring in their businesses, or do the Democratic route of raise taxes of the businesses and the people that are currently in the state, either of which can work. I think that in the long run, over the course of 20, 30 years, it's probably better to give a temporary business cut so that there's more business activity. However, you might need to go the Democratic route. You might need to raise taxes just so you can to afford to pay these $15 billion in unpaid bills you guys got. If you go the Republican route too, they're probably going to cut more government-funded programs, which the Democrats don't like. They're going to cut like Meals on Wheels and all the stuff that helps the homeless people out. They might cut some health and social services programs out. So that's why they're at this stalemate right now. And like, just go with either side. This is why it's really frustrating to me. In certain cases, it's just best if the government just steps out and like let the people vote. This could have been done years ago if you didn't have one party fighting with the other party. Just seriously, if you were to send out an internet vote and like say, you know what, majority wins and we're going with that plan, this could have been solved 10 years ago. So it's just really frustrating. And if the budget doesn't happen today, which most people saying it won't happen today, Illinois is in a pretty bad state right now. Pretty bad state, get that pun? Anyways, people are leaving, taxes have been going up, and government's being cut there, and nothing's going right there right now. So I'm really interested to see what happens. I'll keep you guys updated on this story. So I just want to close out with this. From this article here, without a budget that includes borrowing to pay down the bill backlog, Illinois, by August, will run out of money for key expenses for the first time since this whole problem began, according to the counselor, Susana Mendoza, a Democrat. That means school funding, state payroll, and pension payments could be affected. There won't be enough money for these mandated court-ordered payments. So they're at a really tough roads here. So I think that's going to wrap this video up. I only really want to talk about 3 things today. Nike was up. The big loser today was Micron Technology. I just wanted to mention that because all of the Wall Street bettors bet a lot of money on that today, and they were down a lot today. It was down specifically, I think, just because yesterday there's a ton of articles bashing the stock, and analysts were bashing the stock, and that's why I think it was down like 5% today as of right now, about 5% or so. So that's going to wrap this video up. Thank you very much for watching. You can check out my stock market program in the link below. You're all very beautiful people, and I'll see you guys in the next video.